this button here. Hey, welcome to the closing beat, everybody. Happy Wednesday. How you doing out there? We're financial advisors here at Jazz Wealth. Hope you check us out at jazzwealth.com. Just your average, everyday people. You know what I mean? We don't try to show off with the suit and ties and whatnot. Actually, my wife asked me last night, if I could cook you anything, like what's your favorite meal? I've never asked you. We 20 years. I don't know the answer to this. And she's like, what's the food? Like the one food that just lights up your eyes and you get excited about. And I didn't even have to think about it. I was like, chips. I like chips. And she did not like that answer because she really wanted to cook me something nice. But you can't go wrong with chips. There's not really a bad chip out there that I've come across anyways. So there you go. A little bit more about me. A little bit about what happened last night. Did you watch the State of the Union? I actually didn't. Me and Eric went out a little bit. A couple guys just on the town having a good time. And I missed it. I just totally, slipped my mind. But I did start watching it. It was brutal. It was a tough one there. What really pertains to us is what we want to focus on here today. You got more sort of proposals that would actually raise your taxes. That's a tough one there. You got three main changes there. You got labor regulations, potentially banning non-compete clauses. I highly doubt that would pass. That's not something that both sides even come close to agreeing on. Nonetheless, more of one side. Expanding overtime pay, that was nice, right? You get a little higher overtime pay. Well, that's taxable at the highest amount that you work at. And transitioning more workers from being considered subcontractors into employers. So you get your employment tax there. Both your employer and you would have to pay. So there's been a lot of that stuff lately, and I'm like, okay, you're coming after some tax dollars there. There's a need for tax revenue. So it's a bit tough to hear some of that, but all in all, I haven't seen the whole thing yet, but I think that was a first. That was very interesting. It didn't really affect the markets. If you watch the futures markets after hours, not much, so a little wiggling back and forth there. It's not typical for that to happen. Trump's first State of the Union actually did have quite a big effect on the futures market. But other than that, these things are sort of non-events for the stock market because they're thoughts. They're a rally sort of a thing. They're not official rules or anything. So whether you agree or disagree with what they talked about, nothing set in stone, and maybe they get nothing done, maybe they get a lot done. We'll see. But as far as today, the stock market was really quiet. And typically you say don't short a dull market. It's very dangerous. Today was a dull market. Actually, there was 50% less news publications that came out today than yesterday. So all of it pretty much had to do with State of the Union. But other than that, in the financial world, crickets. There wasn't a whole lot to talk about today. And so the stock market had nowhere to go. And so what happens is it tends to look backwards. What's the last thing I got to hang my hat on? And unfortunately, that's this potential interest rate talk, and maybe they raise rates continuously, and all that stuff we covered yesterday. Well, today it would have worked. If you shorted a dull market, it was okay there. Like I said, a lot less news than expected there. Now, we have this problem with the stock market right now where it's not behaving as a team. And so normally the stock market behaves as a team, and I've mentioned this, I've shown how different stocks are lifting the market and all that, and I keep trying to think of interesting ways to share that with you. So last night, put this together. I'm going to show it to you. It's going to look a little weird, but hold on with me. It's something nobody's going to really show you there. All right. This is the correlation of all stocks in the stock market. That's a scam call. All stocks in the market relative to the market's performance. Real simple. So I'll start with the very basics here. If the line is going higher, then more stocks are moving together with whatever the stock market performance is. It doesn't mean the market's going up or down. This is the amount of stocks moving in correlation with the broad market, or as a part of the broad market. If the number is lower, that means whatever the stock market is doing, it's doing it with less participants. So for example, the start of this year so far, we're darn near double-digit rally here, and less stocks have participated in that rally. And to be exact here, if you look back over the last year, this is the least participation in a stock market rally that we've had. And so it's just another way to illustrate there's only a few stocks lifting this market. It's very dangerous. If you go back and look at something like this, you say, ooh, that looks like a big rally. Nope. That's actually during August, September, where the stock market was selling off hard and more stocks were selling off with the market. In other words, there was a real tight correlation. There was nowhere to hide. Almost all the stocks in the market were pushing to the downside. That's why that number's higher. So if you're a contrarian, you look at this and you say, well, there should be some correlation here at some point. There's going to be a catalyst that gets everybody either excited or very, very scared, and stocks would go together. There'd be a broad index level selling or buying. Right now, we just don't have it. You only have a few stocks doing the heavy lifting. And so when you go back to today, why should the market go higher? If the Big 10 have been lifting the market higher, and today they didn't participate really at all, none of them actually, then why should we be moving higher? The rest of the stocks are flopping around, just doing whatever they want to do. So kind of a fun way to look at that. Now, that also leads into a little bit more, advanced topic. We don't cover too much. Volatility. You notice how the market hasn't been wildly swinging one way or the other? The Fed announcement the other day, that was the biggest volatility we'd seen in a day in some time, at least this year. And so the reason for that is you can look at volatility. This is probably not news to you guys, but you can look at volatility and see it's trading near its lows. So while the market is becoming less and less correlated, volatility is drifting lower and lower and lower and lower, right? That kind of makes sense now. If only a handful of stocks are moving the market higher and the rest are just slopping around doing nothing, there really is no volatility, or very, very little anyways. And so when we go, when we go look at the market here, you go, well, that's a trending higher market. I'm happy with that, although I'm not getting all the participation that I should be because there's only a handful of stocks doing the heavy lifting, and the rest of them are quiet. So total S&P volatility right now is very, very low. And that's two things you can put together. If you're one of those people that likes to bet on higher volatility, it's a dangerous thing to bet on right now, right? Because all the stocks in the market, basically all of them, are showing you we're not volatile, we're calm, quiet, not doing anything. Just those guys over there, they're the volatile ones. Apple, Microsoft, Alphabet, today Alphabet, Meta, things like that. So if you're going to play volatility or have that as a hedge or whatever you're going to do with it, then you want to know that the market as a whole is setting itself up for a volatile week, month, whatever you're betting on there. So very cool. Now, it's good news for options traders in a way because implied volatility versus realized volatility right now is obviously very low. Can't stay low for long. It doesn't do that. You have spikes along the way. So you're likely to see some higher premiums there if you're one of those people that likes to play that game. Otherwise, it's been earnings plays for the options guys out there. The NASDAQ, same thing. You did not have the big participants today. Apple down 2%, Alphabet down 7.5%, Meta down 4.25%, Amazon down 2%, Tesla up 2%, right? So you didn't have those guys. You didn't have the semiconductors, which have been helping out as well, if you want to pick an industry there. You will have Disney after hours, considering I think that is still positive there. And so today, being dull, quiet, low volatility, and drifting lower, actually not that much of a shock. You got the Dow, obviously trending sideways. Again, low volatility with a smaller group of names. There's not much for that index to do until any of those wake up. And same with the Russell 2000, although it is drifting slightly lower. It's been one of the outperformers for the year, and so totally normal to see that pull back. Still up 10.5% for the year, so not too bad there. The S&P up 7.25%. The Dow is the worst, only up 2% after having a really good year last year in terms of losing the least. You got crude oil here recovering off of lows there, which, I'll tell you, if you look at energy, that held up pretty well considering the State of the Union last night. You would have thought that area had a little bit of weakness in mind with the comments made about talking to the energy CEOs and stuff. I don't know enough to say that's true, that's not true, but I do know that the energy CEOs, they have publicly said, we have talked to the president, and the president has told us that you want to be worried about us closing down pipelines and not releasing as many permits and stuff. And so that's why they've chosen to buy back their shares and raise their dividends as well. A little bit of change of tone last night from the president, so maybe that sparks some conversation. I don't know. That was where one of the sort of boos and jeers came along there. So I don't know enough about current news there to say anything different. He did also confirm that he is pushing for that 4% surcharge on stock buybacks there, with a particular focus on the energy sector, because they've made money and they just said, well, we're not going to drill. If we're not going to drill, we have lots of extra cash because drilling is expensive. And so there's probably still going to buy back their shares. because I don't know how much progress that will make as well. What else do we have here? Oh, yeah. Other than that, just a couple places maybe to look. Otherwise, a kind of a snoozer out there. United Healthcare, anything in that space rallied. Cigna, Humana. You got CVS in there as well. They're buying Oak Street, so a bit of a rally there. That actually is now confirmed. I believe that is confirmed officially. Pfizer, Merck, you could look at the XLV healthcare as a whole, just hanging in there. One of the better areas today in terms of losing the least, only lost 1/3%. And then other than that, your real weakness came from communication services, utilities, and technology as well, which have had, besides utilities, they've had a good run. So kind of understandable there. What else do we have here? Hey, non-mortgage consumer credit was up $11.7 billion month over month, which is actually slower than expected by more than half. So check this out. You guys are out there. Now, this is not your mortgage, right? This is revolving credit, auto loans, and things like that. Auto loan departments drop like a rock, right? Now, revolving credit is dropped like a rock. So apparently you guys are saving your money out there. That's a good thing there. And I like it, right? It's tough because if you see the acceleration in the labor market, you think, well, then what are we doing? Are we saving more or are we just spending our cash? Because the economy is supposedly ticking along. However, consumer credit's not increasing and was actually had not increased nearly as much as thought, the 25 billion. So there's been a small uptick in the personal savings rate, 3.4%, still minusculely low. But nonetheless, that's kind of an interesting stat there that may start to play out into weakness or some pressure put on the credit card companies because, well, number one, we're not using it as much. And then go over to lenders, maybe the subprime lenders in the auto loan market. Those are public companies as well. It's one of those things. I'm like, I looked at it and I was like, yeah, maybe I'll bring that up and give you guys an idea of where to look. Okay, stocks in the news. Chipotle was one of them. Sales up 5.5% compared to 7% expected. This was pretty much a big miss here. Overall earnings down 7%. Operating margins, that was fine. 24% versus 20%. I'm pretty sure that's the number. They opened 236 new restaurants, and I found this fascinating. 202 of them have a drive-through. Do we have a Chipotle with a drive-through? Well, there's not one, right? Maybe next year because they're going to open 255 to 285 new openings, although, wait a minute. So they'll have 255 to 285 new openings. If you dig a little bit deeper there, looks like they're considering some of them that they add a drive-through to a new opening. So, okay, a little tricky with the numbers there. Good job, guys. Nonetheless, the stock's a little bit lower there because that's a miss on earnings. Go buy yourself some Chipotle. Yum Brands, cool little technical pattern here. If you like the breakouts, obviously it's a wider breakout, not so interesting, but with today's performance, you expect that thing is trying to break out. Taco Bell was the fascinating one. I like looking up the individual stores. Taco Bell sales up 11%. That's because of Kevin over there, man. He's helping you out. Kevin's over there buying them Taco Bells. We got one right around the corner. Analysts expected half of that. So I don't know what's driving their sales, but good job. And they're also raising their dividend as well. Profit margins over all restaurants, 15.6% there. That's a little bit of a drop, I think by about 2 or 3%. So margins a little bit tighter, but apparently Taco Bell's helping make up the difference. And good luck. You got Uber. There we go. Better than expected earnings. They're putting their total gross bookings, this includes delivery as well, anywhere from 20 to 24% growth year over year. I bet you that's what did it today because I don't see a whole lot there for them. Very nice. eBay's in the news there. They're getting rid of some people too. They're going to reduce the headcount by 4% there and just simplify things. That was the actual words they used. Just kind of simplify things around here because maybe they're spending too much money. And lastly, do you like odds? You want to try something here? So Baxter, out of all the companies reporting earnings tomorrow, Baxter has been down on the earnings announcement 8 of the last 8 quarters. aren't you kind of like, okay, this time they gotta say something better now, right? The stock's going to be higher for sure. So that's the first time in about a year that I have seen that, where a company has been down 2 straight years in a row on earnings. And you can look at the, here's the last earnings report, down. Last earnings report, down. Go to the last one, down right there. And you can even see the last one over here, down. So you go back 4 more and come on, we got to check in on this and just see if Baxter actually manages to do something higher on earnings. But they beat on earnings 73% of the time, 72% of the time on revenue, but the stock sells off. It's got to be all guidance, because they do give guidance a little bit more than the rest of the groups out there. Jazz After Dark last night, we did 4 ways to build wealth and stay away from gold. So hopefully you'll check that one out there. And our wine and wealth classes, really good lately. We've done return on capital. We've had a lot of requests. We're going back to options, maybe in the covered call format there, with the different returns on capital you can generate from doing that. So we will consider that one, no problem. I will answer your questions if I can, and if I can see them. And we'll roll on there. You should not eat Taco Bell after age 25. You hear that, Kevin? Kevin's 21. He's got 4 years. There you go. That's probably the last time I had Taco Bell. If it was a short story, this office is literally next to the very building that I worked in, and that company's still there, in high school. And so I would just walk over to Taco Bell, and the lady got to know me so well, she would give me a cup every day, and I could just fill that cup up at their fountain as much as I wanted to, Mountain Dew constantly. And if I would ask for like a little burrito, she would just give me a burrito. I think she liked me. Richard says, do you like scotch? I like it. I don't love it. I'm learning. I've heard from a number of clients that say, you got to keep at it, man. Keep trying. You're going to find one you like. I just have not. Asraf says, speaking of Chipotle, one time before moving from your old office, you talked about how expensive it was. I went to Moe's the other day, and it was double the price of Chipotle. Really? There's a Moe's down the road from here, actually. I have not been there in some time either. It's been years. My daughter was doing gymnastics. I used to go there and eat. So it's at least been 6 years, probably more. Yeah. Healthcare stocks, utility stocks, real estate stocks. If you like the counter trend stuff, Afro Invest. That's where you'd be looking there. That's all you got. Counter trend wise, unless it's an individual earnings stock, those are the 3 sectors that provide the most choices. Right? What are your thoughts on ticker keys? There in a while. There you go. They account for 100% of the top 25 tech companies, 100% of 25%. Well, that might explain why it's just trending higher, right? They're just doing their thing. I don't have any new thoughts on it. I think it's obviously showing complete relative strength compared to everything else, and even started its rally earlier. Maybe that's part of the reason. Well, okay, comments. Thanks for the heads up. You are dismissed. You may go. What do you think of starting CVX here? Oil keeps going up, but CVX keeps going down. Well, oil actually hasn't kept going up. It's been kind of choppy here, right? In the last couple of days, of course, oil has gone up. But other than that, you could do the same thing here. If you take CVX's performance from October to now, right? Basically in a sideways range. Now you go over and you look at oil. You got the same thing. A little bit of a rally up here, but you got the same thing. You're in a range. So one is not trending higher and the other is not. So I would disagree with that. But do you think oil prices are going higher? Every analyst in the oil space thinks you got higher oil prices than $75. So that would eventually help them. Today was a rough day for these guys, right? Because they were sort of singled out last night. Yep. And I'm sorry if I missed any questions here. In what ways I treat your Roth and my taxable brokerage differently as a young person in terms of what to hold? Oh, that could be a whole class in itself right there. Yeah. Your Roth, obviously, you want as much growth as humanly possible. And depending on your income, that may be the same for your brokerage account. Usually the youngins, the Roth is like, okay, make it grow, Dustin, but then they use their brokerage account. Usually the youngins want to trade a little bit. So if that's not you, I would want to dig a little bit deeper on that. Are you able to do one do one what? Where you show historical performance of your funds versus the S&P. Could we do one? Yeah. Actually, and any clients that log into their accounts, we put the benchmark on there. Now, it's not always the S&P, to be fair. If it's a small cap fund, well, naturally, we want to track the Russell 2000. Must have been to Disneyland a few times recently, Dustin. Man, I was there over last weekend. I didn't go into the parks. We went over there and we went to the boardwalk and just kind of walked around, watched the fireworks and stuff, and then just came home. Feds are starting to predict 6%. Well, that would maybe be some people that they interviewed or something, but that would not be the going prediction in the market at the moment. That you can actually look at to see what are people actually putting their money towards, and 6% is not on the table at the moment. Super Bowl ads worth the money. Oh yeah, we got one coming up, the Super Bowl ad. So don't worry about it. I think it's worth the money. We'll see, right? How much is it? It's you saying it's $7 million to be in a Super Bowl?
It's for a quick Google search. Yeah, 7 million for 30 seconds.
Whoa, I thought I remember like 2 million or something. 7 million to play that game. Oh, okay. Well, we don't have a commercial actually, so we'll air a commercial, but it'll just be like on our channel. How about that? Small caps have a ways to go before getting fairly valued. Yes, I would love to see a pullback across the board, and it may be working there. Are Chinese stocks starting to benefit from opening things up? They are starting to benefit, but there's a leaning pressure, or I should say support, in that tech space. With all the AI talk going around. By the way, Baidu blows that ChatGPT out of the water. Baidu has been working on this a lot longer. I would highly suspect they will be talking more about that. But Baidu is, and yeah, we have these balloons flying over the United States, but yet they have the best AI out there in terms of a competitor. Yeah. You want to see leg under 30, do you? Oh, I don't know about that. Yeah, that would mean new lows for leg. No, because in that space, you have no real weakness. In the short term, sure, but you have no real weakness there. So what would change to cause that, to where people would want out of it, and everyone over the last year would officially have a loss on that? That'd mean a lot of people were bailing out on that stock. That would take more than just a normal, it's a pullback, you know? Oh, your brother's honeymoon in Japan is going to Disneyland there. Oh man, no, I've never been there. That's kind of a bucket list thing, is to get through that. I do have a client that's been to all of those as well, around the world. I could ask him. Yeah, you gonna make a halftime show, Super Bowl halftime show? I'm sure that would be popular. Yeah, yeah. You want Cody's camera back. There you go. They can hear the voice, but they don't want the camera.
No, they don't.
No, they don't. That's what I see right there.
Then everything breaks. And
Everything work. Well, then he's got to do his hair and everything. Yeah. All right. I'll wrap it up there and get out of the way. Thanks for joining us here. We will be back tomorrow, of course, to do it all over again and see what the world has to offer. Expect more news tomorrow. Today was very light, so a lot of companies likely try to push out some news tomorrow, and we'll cover it. So I appreciate you watching. Have a great rest of your day.